just something to keep an eye on because the bond market has been getting torched in the last couple of weeks. But really, as you'll see throughout the year of 2021, keep in mind that price moves inversely to yield. So here you have the yield back in the beginning of the year was 95 basis points. So it's up 40 basis points in 2 months, which is a lot. Simple way of thinking of that is that, let's say you have the bond that yields 1%. Well, if now in the open market, you can get a 1.4% yield, the 1% bond is less valuable. So anyway, quick note before we start this, today's video is brought to you by Kuya Silver, who's building the next high margin silver mining company. And certainly you may have caught David Stein of Kuya Silver on some of the recent roundtables. Pretty impressive fella. And certainly, while I am not legally licensed to give financial advice, that's a company that I'm interested in and take a look at. And you'll be hearing more about. Check on the silver price, $27.80. And now back to bond land, because it's interesting. You see CNBC on the cover here, and obviously talking about the stock market, which should always be up. Dr. Fauci says new data suggests COVID is worse than ever. Certainly, if you listen to Jerome Powell's testimony yesterday when he was talking in front of Congress or Senate, I mean, this guy makes it seem like this pandemic is raging out of control again. Of course, House Democrats aim to pass $1.9 trillion COVID relief bill on Friday, not making a dent in the stock market, but seems like the bond investors are noticing because, as you see here, got as high as 1.43% today. Has come back down a little bit. I mean, that spiked up on the open, and who knows what Jeremy and his buddies were buying with all their quantitative easing and stuff, which always makes it hard to have any idea. Well, actually, it's not hard to have any idea what would really happen. I mean, if the Fed weren't buying all this junk, the thing would have already collapsed. So I don't know. Maybe there's someone who is buying a little bit today because they think the Fed's going to buy more. Again, if you subject yourself to some of Fed Chair Powell's nonsense, I mean, again, the guy talks about COVID as if it's day one, let alone now entering year two. And somehow quantitative easing, slap some more on, that's going to fix it. But translation, anyone who thinks this guy is going to stop printing money anytime soon, please call me. I would love to play poker. Here's yesterday's headline. Dow reverses 360-point loss as and ends day higher after Powell eases inflation fears. How does a guy ease inflation fears? By printing more money? I mean, he didn't ease my inflation fears. I went and bought a $15 margarita with my lunch yesterday. So Bitcoin falls after Yellen warning. It's interesting. I was listening to a video yesterday with the connection between, well, certainly what any of these guys say, how the market reacts. Are we getting to the point where the market will just start laughing in their face? It sure looks like that's what's starting to happen in the bond market. Hey, who knows? Maybe investors are clamoring for more negative yielding toxic junk soon. But let's see. Fed is focused on employment and seems very willing to absorb higher inflation. Where is somebody going to explain to me how the inflation is still weak? I mean, really, I keep hearing that 40% of the dollars in existence were printed last year, but Powell eased those fears, not by retracting any of the money, but let's see. How did he do it? He said inflation is still soft. Oh, so Jerome Powell said so. Okay. All right. Well, I perfected my six-pack abs last night, too, while I was eating ice cream. So there you go. Now in my world, I have a six-pack, just like Jerome Powell has soft inflation. He was even talking about the Senate thing that, if it's an average. So if there's one quarter where, hyperinflation is down, that they're going to hyperinflate faster the next quarter to make up for that. They've been saying that since 2007. All right. Here I am. Been watching too many Jeff Curry videos and I'm getting sloppy with my numbers. Here they've been saying that since 1913. And, so just when you're reading this stuff, here's a question that they don't mention on Wall Street, but for people who actually want to understand what's going on, the economy was so strong since Ben Bernanke's quantitative easing policies until, Jerome Powell went on 60 Minutes, said it was just humdinger until COVID hit. Didn't mention why it already lowered interest rates, why it started swap lines a year before. But even aside from that, this thing was so strong for like 2010 to 2020. How come they never raised interest rates then? Why didn't they repay any of the debt then? It just skyrocketed. And they said they're strong while they put it all on the credit card. Short answer is that they lied their faces off. They lie to you every day. That's what bankers do. Chris, what a revelation. So, hey, I'm just telling you what it is. Quick look before we wrap up. Here is U.S. Department of Treasury, everybody's favorite institution. You may want to check the data here. Who knows? But you see here is the 10-year, the 20-year, and the 30-year, those last three columns. 10-year was climbing, but it really started to take off just a couple weeks ago because it kind of fluctuated back and forth. But then I guess, Friday the 12th, February, see a jump there. Then there was that big jump over the weekend to 130, been jumping again to 137. And let's see, do we have any yield curve inversion here today? There's 1 month, 2 month, 3 month. We see a little bit lower on the 2 month. Then the curve, it's widening a little bit out there, not inverted right now. Who knows what the Fed will cook up on their next meeting the day after the Ides of March. How exciting will that be? Definitely don't look up the definition of that or what happened on the Ides of March in 2008 or 2020. And just let it be a surprise. I can't wait to see what Jeremy and the gang have cooked up. But while he's focused on the raging COVID pandemic, I would keep an eye on the bond market because I think they're telling you something there. And with that said, be back in about 21 minutes with a quick update of the physical silver market with Andy Sheckman of Miles Franklin. So hit that subscribe button and the notification bell, and I will see you in a little bit.